Well, hello there, everyone. Welcome. Happy Wednesday. So excited to be here for our weekly tax tips, usually Tuesday tax tips. But this week we had a little bit of a tech problem. We lost internet yesterday. We lost internet all day because of an accident. And so we couldn't go live. But here we are today. We're going to get this done. And I am very excited to be here. So bear with me 1 second. Let me get the tech stuff going. Also, for those folks watching live, let me know that you can hear me in the comments. I think everything looks good, but I want to make sure y'all can actually hear me. Oops, and we lost our stuff. Hold on. Okay. So, all right, we've got everything up there. We're good to go here. I got a lot of tech stuff now that we've redone my studio. So it's a bit much. Okay. I'm going to pull these up and let's hope this works. Perfect. I love it. We're going to change that up. Awesome. Welcome everybody to our Tip Tuesday, except we're doing it on Wednesday. And today we're going to be talking about some year-end tax tips. So bear with me a second here. Let me get the slides going. Okay, tip number one. And for anyone watching live, if you've got questions, feel free to drop them in the comments. Happy to answer those for you. So tip number one is to really review your numbers to make sure that everything is cleaned up and organized and ready to go, both for filing your tax returns for the current year, but also just for kind of rolling into the new year and making sure that you've got everything buttoned up. So tip number one, review your numbers, make sure everything is categorized correctly. All of your expenses, are they categorized in the right way? Advertising, marketing, technology, whatever it may be. I also want you to make sure that your records are up to date. So for those of you using an accounting software, hopefully this is doing this automatically for you. It's syncing with your bank account, with your credit card. But if it's not, you'll want to make sure that you go ahead and get all those transactions in there. And even if it is, you'll want to make sure that it is actually working. Sometimes the sync just doesn't work or it doesn't pull in a certain date or whatever. So at the end of every month, I actually go in and I reconcile my accounting reports with my bank statement, with my credit card statement to make sure that everything's in there. So you'll want to go ahead and do that now. That's going to be super important for when you go to do your taxes or you give your CPA the info to do your taxes, because you want to make sure that everything is in there correctly, right? You don't want to have missed any income coming in or any expenses going out. The last thing is to revisit your quarterly estimated tax payments. So hopefully you've been making these. If you haven't, don't panic. That's okay. This is a chance for you to catch up, but go back and revisit the payments that you've made up to this point. Now, the last estimated tax payment of the year, the Q4 estimated tax payment, isn't due until January 15th. But I like to take this time right now as I'm kind of getting close to the end of the year to just do a quick run through of my numbers, see where I'm at in terms of taxable income, aka profits, and look at what I've paid in already and start to get a sense for, am I overpaid in, meaning I've paid plenty and I'm not going to make any payment in January? Am I underpaid in, so far in this year, meaning I'm probably going to have to make a bigger payment in January? Or am I just going to have to make a January payment kind of based on my last quarter because I'm good, because I've stayed on top of my quarterly taxes throughout the year? So just checking on what it is that I've done throughout the year and making sure that I'm prepared for whatever it is I'm going to have to do in January, and then setting that money aside so that I've got it. Cool. Okay. So tip number one, review your numbers, make sure everything's cleaned up and in order and categorized correctly. Tip number two is to think about ways that you can minimize your income. Now, I want to be clear, we're not talking about doing anything sketchy here. We're not talking about breaking any tax laws. We're just talking about looking at your tax situation this year and next year. I'll talk about this in a second. And then just thinking about how you can maximize that situation. So the first question I always like to look at is, where do I think my tax rate or my tax bracket is going to be this year versus next year? So 2020, the year we're in right now, was a pretty hard year for a lot of people. A lot of people lost their jobs. A lot of businesses saw reduced revenues. And so if that's the case for you, it may end up actually being the situation that the tax rate that you fall into in 2020 may actually be a lower tax rate than it would in a normal year. Because remember, our tax rates change as your income goes up. So I think that's going to be probably the case for a lot of folks this year, where your overall income is going to be a lot lower than what it has been in past years and what it will be in future years. So if that's the case, you'd actually want to shift income to this year because it's going to be taxed at a lower tax rate. If it's the opposite case, so let's just say that, let's say you had you got a really big bonus this year from something that you wouldn't expect to get in a normal year. So maybe you're actually in a higher tax bracket this year than you'd expect next year. Maybe your spouse, is working this year and they're actually going to go, they're going to stay home next year. They're not going to work next year. So collectively your taxable income's higher this year. So you're in a higher tax bracket this year than you expect to be next year. If that's the case, then you actually want to try to shift income to next year where your tax rate, your tax bracket's going to be lower than it is this year. Again, I think that's probably not going to be the case for as many people. I think it's going to be the opposite, where your tax rate and tax bracket this year are probably lower than they will be next year. But if that's you, if this is a higher tax rate year for you, then you'd want to consider shifting your income. Now, how do you do that? Well, for most of you, if you're a cash basis taxpayer, meaning you only record your revenues when you actually get the money in, and you only take a deduction for your expenses when you actually pay them out, then what you can do is, my typical advice, which is always to, follow up on your invoices, make sure people pay you. You might just hold off on that. So you might actually not chase folks down for invoices. You might wait to bill somebody until after the first of the year. Now, I want to be clear. That is how you would minimize your income for tax purposes. But there are a lot of other considerations in this stuff too, right? There are cash flow considerations. That's the first big one that comes to mind. So don't do this if it's going to put your cash flow into a precarious situation. Don't do this if it's going to throw off a lot of other stuff. This is just something you can think about doing if you're in a situation where it's not going to negatively affect your business otherwise, right? So that's how you would shift your income to another year. On the flip side, could you shift income into this year? Let's say you have, coaching clients who maybe pay you on a monthly basis. Well, maybe you reach out and say, hey, I'll actually give you a little bit of a discount if you pay everything in full right now. This is why, for example, I've got tax prep services that I offer. This is one of the reasons why I offer that pay in full, why I am offering the pay in full option right now, because I'm shifting income into this year where I expect my tax rate to be lower than it will be next year. So thinking about how you can do that. Again, I want to reiterate, this is a trade-off between having the cash now and then paying taxes later. So you really need to look at the entire financial picture for your business and decide which is more important to you. Is it pushing off the tax bill, or is it having cash in hand now and making sure you make this decision that doesn't negatively impact your business? Cool. All right. So tip number 3 is to maximize your deductions. So this is the flip side of what we were just talking about. Again, you're going to want to think about where your tax bracket is this year versus next. If you've got a lot of income this year, then you may want to really focus on maximizing your deductions. On the flip side, if you don't have a lot of income this year, then this is probably not something you want to spend your time doing, because it's not going to be worth it. You're going to want to wait and maximize those deductions next year. If you do want to maximize your deductions this year, what you would do is you basically wouldn't wait until next year to make purchases that you already were going to make. So if you knew, let's say you had a bill due in January for something, maybe, some of those memberships, you'll pay one price for the whole year, right? And maybe that bill comes due in January. So maybe you actually go ahead and pay that now and take that tax deduction for that business expense this year to maximize your deductions. Now, this next bullet point, I want to put like a big disclaimer on, okay? Because I normally don't recommend, I'm very cautious when I recommend using a credit card. But my next point is, consider putting something on a credit card to actually get that deduction this year. But the bill doesn't get paid until next year, right? This is only if you're very diligent about paying off your credit card. I'm not suggesting that you go rack up your credit card with a bunch of business expenses and that you then can't pay, right? And that leads me to my last bullet point, which is, do not spend money just to spend money. This is something that I see all too often. And candidly, it's something that I see a lot of folks who work with CPAs do, because their CPA says, well, we got to maximize your end of year deductions. And then they go spend all this money that they don't really want to spend on. So do not spend money just to spend money. Do not spend money just to get these tax deductions. This is only if you are already going to spend this money anyway. It's just thinking about the timing of when you actually spend that. Cool? All right. The next one, tip number 4, is to plan for your future or your retirement future, right? Hopefully we all get to retire. That's the goal. So let's make sure we're planning for it now. This is actually a huge opportunity if you've got some extra cash lying around at the end of this year. I know that may not be the case this year, especially, but if you do, you've got an opportunity here. So basically what you're going to do here is consider contributing to a retirement plan. Now, there's a few different types of retirement plans for self-employed folks. So that what you're going to do, I got to shift for a second here. Which one you're going to do depends on what you already have set up or what your goals are. I've listed a few here. I'm going to walk through each one, but basically the 3 options for you are a SEP IRA, a simple IRA, or what's called a solo 401k. So a SEP IRA, you actually can contribute up until the date that you file your federal return. So for most of you, that's going to be April 15th. It could be October 15th if you extend your return to that date. So with the SEP IRA, you can contribute funds to that account up to the date you file your return and have it count for the prior year. So you can contribute those funds by April 15th or October 15th of 2021 and have them count for the 2020 tax return. A simple IRA is the same thing. The contribution has to be made by when you file the tax return. But the issue here with the simple IRA is you had to have had your simple IRA set up by October 1st, 2020. So this is only an option if you already have a simple IRA set up, at least for 2020. If you're thinking about retirement and thinking this might be something you want to do in 2021, I would look into these 3 options now because some of them do have set up date deadlines. And so make sure if you don't already have something set up now, you're looking into them so that you can get them set up well in advance of the deadline in 2021. Which leads me to the last one, which is your solo 401k also has a setup deadline. So the solo 401k has to be set up by December 31st of 2020 to get a benefit for 2020. Now, you still have time, right? At least as the date that the date we're recording this of, you still have time. So if you want to do a solo 401k, you got a little over a week, maybe 2 weeks. So definitely go ahead and look into that. That one, similar rules though, you can, once it's set up, you can contribute by the date that you file your return. So that could be April 15th of 2021 or October 15th of 2021 if you do the federal extension date. So a few options for your retirement contributions, but it's a great option if you have some extra cash left over and you're looking for a tax deduction. Okay. So again, I'm not a retirement expert, so I'm not going to go too much deeper into those, but something to think about, talk to your CPA about if you've got one. They can be great options if you've got the extra cash. And welcome to everyone who is watching live here. Feel free to drop your questions in the comments and I'll get to those at the end. Okay. So tip number 5. This kind of goes back to the numbers stuff. And this is the thing that I think nobody really likes to do, but it's so important. And that's to review your systems and processes. So I think the end of the year is a great time to look at everything you're doing in your business and just really ask what's working, what's not working, what can I do better in the new year? And when it comes to the money in your business, what we really want to look at are those systems and processes. And I've listed just a few here. I'll talk about each one quickly. But there, you may have others too, depending on the type of business you have. But I can tell you when I talk to folks in my community, the thing that stresses people out the most, I mean, I see it when y'all join the Facebook group, I ask that question, what's your biggest question about money? And constantly I'm seeing systems, organization, how do I manage it all? How do I stay on top of it all? How do I keep it, organized? How do I keep it working? How do I make it less stressful? How do I make it less work on my part? And all of that comes down to your systems and your processes. So the first one is your accounting and reporting system. So this would be your books, basically. It could be like a QuickBooks or Wave Apps. I recommend Wave Apps. I think y'all know that. I love Wave Apps, waveapps.com. It's free. It's easy to use. It's a great tool. But QuickBooks is an option as well. Xero, spelled with an X, Xero is an option as well. Both of those work if you have inventory. So Wave Apps doesn't work if you have inventory. For the question about S Corp, so we're running retirement accounts. I'm an S Corp, so it doesn't mean I would use a solo 401k. So that's a great question. And again, I'm not a retirement expert. I can't speak today. You could definitely set up a solo 401k. I also believe you can set up the simple IRA. I'm not positive about the SEP IRA, and I can look into that and get back to you. So I'll respond after this. I'll respond back to your comment. But yeah, I would think you'd probably end up doing the solo 401k, but let me hit you back on that one because I want to just confirm. Again, not a retirement expert. I don't do a lot with that. We're actually going to be having in the new year a friend of mine who does kind of personal financial stuff come in and talk, because I think it's just really important for everyone to have a good hold on that. So you're so welcome. So accounting and reporting system, making sure you have one set up, making sure it's something that's easy to use, ideally that it syncs with your bank account, with your credit card, so that all that information is coming in. You don't have to enter that manually. That is really important. Also having, what's your invoice and sales system and process look like? I really streamlined mine this year. Starting in 2020, I was using a few different things. I had Kajabi for my courses and membership. I had Shopify I was using for my strategy calls. I was using Wave Apps for invoicing for my coaching. And now I've really streamlined everything. I'm doing it all off Kajabi. And it's so nice to have everything in one place. Everything's so much more efficient and more organized, and the process works better. So thinking about what is that process? Always say this, make it easy for people to pay you and minimize the amount of manual work that you have to do. Because when you become the barrier, or when you become a step in that process between them deciding they want to give you money and them giving you money, then you can become a bottleneck, right? And we never want to make it harder or slower for someone to give us money. So what does that process look like for you, and how can you make it more efficient? Also, let's talk about tax tracking and payment. So, there are a bunch of tools out there. Candidly, there's not a single tool that I've loved completely for folks. So for me, this is still very much a manual process, which I'm not a fan of, but it is for now. But what is your tax tracking system? So are you doing quarterly taxes? What does that process look like? Mine may still be manual, but I've gotten it down to where I have a very specific process every time I sit down to do my quarterly taxes, so that it goes like that. It's super fast and I know exactly what I'm doing, and I'm not wasting time trying to figure stuff out. So what does that process look like for you? And then the last one, bank accounts. This isn't really a system or a process, but it can be. So thinking about, what are the bank accounts you have for your business? Do you just have one, or do you have a tax savings account? Do you have a separate savings account? Do you have, what are the other accounts you have? And what is the process around those? So the process that I recommend to all of my folks is, when you do your money meetings, which is where you sit down to review the numbers in your business, ideally doing those twice a month. So I like to do them. I like to do mine on the 5th and the 20th. So basically 5 days after the end of the month, and then 5 days after the middle of the month. When you sit down to do your money meetings, what is your process for moving money? So do you put a certain percentage in your tax account? Do you put a certain percentage in your savings account? Do you pay yourself, owners pay a certain percentage? So what is your process for that? Write it out. Make an SOP, a standard operating procedure. I'm losing words this morning for that, so that you know exactly what to do, so that when you sit down to do that money meeting, you're literally just going, okay, step 1, step 2, step 3, step 4, what do I need to do? And you're not wasting time trying to figure it out, right? Okay, so that was tip number 5. Tip number 6. This is my favorite because I love taxes, and we are in the middle of tax week here. If you don't know, I'm over on Instagram every single day, Meg K. Wheeler, doing 10 days of tax tips. Today is day 3. So you haven't missed much, but there's plenty more awesomeness to come. So tip number 6, do not push your taxes till tax time. Let me just tell you, and for what it's worth, this is not a judgment thing, because I 100% do this. So I am super bad about waiting till the very end to do my taxes, but it's never, ever worth it for a few reasons. Number 1, it's better to just get it done as early as you can, so that you have plenty of time to figure out if there are any issues, if you've got questions, if there's anything going on you need to fix or figure out. Number 2, if you are getting a refund, obviously you want to get that sooner than later. Side note, I really hope you're not getting a big refund. If you are, it means you're loaning a lot of your money interest-free to the IRS. Send me a DM or comment below, and I'm happy to do a video more on that if that's you, because I want to help you keep more of your hard-earned money. But also, if you are going to have someone do your taxes, waiting until the last minute makes it really hard to find somebody who, one, will actually do them at all, but two, knows your business and can take the time to really understand your business. So especially if you are going to hire someone, think about that now. I know it feels early. I know it feels like, why would I think about this in December? But let me just tell you, most CPAs have already started to re-engage their clients for the year, for the upcoming year. So if you don't already have somebody, we're getting close to that period where it's going to be harder to find somebody to do them. I've just opened up seats for my tax prep package, but I guarantee those will fill up. And probably going into January, I'm guessing we won't have any available slots. So this is the time to think about this. Now, even if you're like, okay, I don't think I want a CPA, I want to do them myself, fine. Make that decision now so that you at least know that that's what you're going to do, and map out your deadlines. Okay, if I'm going to do them myself, when am I going to get all my documents by? When am I going to sit down and do my first sort of prep of it? When am I going to come back and review? I always recommend those be separate so that you can kind of step away from it and then come back and review. So think about what those deadlines are, get those in your calendar now so that you're not rushing when it comes to April 15th. Also keep in mind there are tax forms that are due depending on the form between January and April. I've listed a bunch here. I'm going to run through them really fast. The W-2. So if you have employees, this is how you'd report their wages. So this is due in January. The 1096, which is the form that you report compensation for independent contractors. That's the one you actually file with the IRS. I should have also written here 1099, which is the one you have to issue to each individual independent contractor. Those are due in January. So make sure you've got those. Form 941, this is reporting all of your taxes paid to Social Security, to Medicare, and then your income taxes. Again, this is if you have employees. Form 940 is reporting on your federal unemployment tax. And then Form 1095 is if you provide health insurance for your employees. So those last three, 941, 940, and 1095 are less common, at least in my community. They're obviously very common if you have employees. I know a lot of you don't. But the 1096 and the 1099, if you have independent contractors, that is absolutely something you need to be thinking about. In early January, I will be doing a Tip Tuesday on the 1099. So if you're not sure how to, what to do for that or how to do those, stay tuned. I will give you all the information you need. But what I would do now is start making a list of every independent contractor you paid in 2020. If you paid them at least $600, make a list of all of them. And just have that list so that when we do that 1099 prep on Tip Tuesday in early January, you're ready to go. You know exactly who you need to reach out to and who you need to send a form to. Cool? All right. Tip number 7. I think this is the last tip. It's embarrassing that I don't, hold on. Let me look at my notes. Nope. We've got one more after this. Tip number 7, review your tax structure. So, and I know someone here commented that you're an S Corp. That's great. I love to hear that. So this is a great time to say, am I the right tax structure? So an S Corp, and really it's the S Corp question. So the S corporation is a type of tax classification. It's not its own legal entity. So you would have to be a legal entity to then elect to be treated as an S corporation. So you'd be an LLC or you'd be a C corporation, and you would file a form with the IRS that basically says, I would like to be classified as an S corporation. The benefit of an S corporation is that once you've paid yourself a reasonable salary, and what that is a whole different conversation. But once you've paid yourself a reasonable salary, anything you distribute to yourself or other owners beyond that reasonable salary is not subject to payroll or self-employment taxes. It's still subject to income tax, but it's not subject to payroll or self-employment tax. So there's a tax benefit there, and it can be a pretty big one if you're making a lot of profits and you're really paying yourself quite a bit. So asking that question, is now the right time to become an S corporation? Now, I often get the question, well, is there a certain number I should be making before I become an S corporation? And I hate when CPAs sort of say, oh, yes, it's this number. No, there's no one specific number. What tends to happen is it tends to be the case that someone making above 50,000 that you're paying yourself. So after all your expenses and everything, you got 50,000 that you're paying yourself. it tends to be worth starting the conversation. Does not mean that you should do it at that point, but that's when you should at least start having the conversation. Because remember, you have to be making enough to pay yourself and any other owners a reasonable salary and then some, because the and then some is the part that you get the tax benefit on, right? So that's really when it starts to make sense to have an S corporation. Once you become an S corporation or you get that classification, there's a bit of an additional administrative and compliance burden. You have to file an additional tax return, plus you've got to do the initial filing to become an S corp. So there's a little bit more work that has to go on. You also have to put yourself and any other owners on payroll, meaning you've got to actually pay yourself consistently as if you were an employee. There can be a cost associated with that as well if you get a payroll service, which I highly recommend, and I recommend Gusto, Gusto, if you're looking for one. So there's an additional burden with that, but there are also potentially some pretty significant benefits. So thinking about, should I become an S corp? Now, why does this matter at the end of the year? Well, because the election to become an S corporation for the year that you're in is due March 15th. So if you wanted to be an S corporation starting in 2021, you would need to file that form with the IRS by March 15th, 2021. So you've got a couple months to think about it, but it can take a little bit to get all that paperwork together. So definitely make sure you're thinking about it right now. Okay, and the last thing I wanted to talk about real fast before we wrap things up is there are some COVID-specific considerations this year, obviously. So some things to think about as we're going through kind of year-end tax stuff, what that has come up this year specifically because of COVID. So the first is the CARES Act, which was the big stimulus act that was passed this year, actually expedited the refund process for what's called your AMT tax credits. Now, many of you may not have these, so maybe this isn't relevant to you. But if you do have unused AMT credit, you can actually apply for a refund of those unused credits. And so you can actually get them in the 2020 tax year. You can get them earlier thanks to the CARES Act. So that's something you want to be aware of. Work with your CPA to do that process now. The second is your deferred payroll taxes. So if you do have employees, there is an option or was an option to defer payroll taxes for your employees. Again, this is all part of the COVID stimulus this year. It basically allowed deferral of a portion of your payroll taxes, and then basically you would owe 50% by the end of next year, 2021, 50% by the end of the following year, 2022. So if you are choosing to do that deferral, if you did that deferral and you want to pay and you have the cash to pay those payroll taxes, you could do that now to get the deduction. So you don't get the deduction for those payroll taxes until you actually pay them. So if you have the cash, you could do that now to get that deduction early in 2020 to reduce your tax liability. Cool. Okay, the third is home office deduction. This is a big one, and I think this is going to be a big one this year because a lot of people are working from home. Here's the thing, the deduction's a little finicky. So if you are working from home, you can consider this deduction, but there's a couple of rules. Number one, your office where you work, the space you're working at home, has to be your principal place of business, meaning it can't be also, it can't be used for other stuff too. It's got to be your principal place of business, and it's got to be used exclusively for business. So you can't use your kitchen table. You can't use your sofa. Now, it does not have to be its own room. It can be a space in a room. But if it is a space in a room, you've got to make sure that it is very clearly your working space within that room. So it's not a table that during the day is your office and then at night is the kids' homework. Like it's got to be exclusively your office space. It's got to be sort of delineated, meaning it's got to be really clear that it's your office space, like nothing's encroaching on it, and it's, what else was I going to say? No, that might've been it. Basically that you just need to make it very clear that that is your business working space and nothing else. So again, like don't let your kids do their remote school at the same desk that you're doing your work at. That's not going to help you take that home office deduction. So if you have questions, feel free to put them in the comments about that. But just know that it is a little bit finicky and you've got to really meet those requirements of it being your principal place of business, meaning that it is where you do your work. So if you do most of your work somewhere else, then you can't take it. and exclusively used for business. So again, can't be your kitchen table, can't be your sofa or whatnot. And then lastly, I think this is lastly. Yep, lastly, home office supplies. So this is one to think about as well. Did you purchase a new desk chair? Did you purchase a standing desk? Did you have to purchase some other supplies because all of a sudden you're now running your business out of your home? If that's the case, as long as it's used exclusively for your business, then you can absolutely deduct it. So, all right, friends, that is it for our end of year tax tips. Hope you found this helpful. Again, feel free to drop questions in the comments. And I will get back to you ASAP on those. And I also just wanted to remind folks that if you are looking for done for you tax prep services, you can head on over to megkwheeler.com/tax. I've just opened up spots for my 2021 tax prep services. This includes your 2021 tax preparation, federal and state. It includes your 2021 quarterly estimated calculations. It includes quarterly check-in calls with me, unlimited access to ask me questions via Voxer, plus some other fun bonuses and surprises. And when you grab your spot by December 31st, 2020, I am throwing in your 2020 tax prep completely for free. So this deal is never going to exist again. It's a one-time thing. I'm doing it because I'm just rolling this stuff out, and I'm very excited to offer it to you and get you on board so that you can stop DIYing your taxes, stop stressing that you're doing things wrong, and frankly, just stop wasting your time on things that aren't in your wheelhouse. Let me do them because they're in mine, and that way you can get back to doing the things that you are really good at and that you really love. So again, head on over to megkwheeler.com/tax. And otherwise, I will see you back here next Tuesday for another Tip Tuesday. And don't forget to join me over on Instagram, Meg K. Wheeler. I'm doing 10 days of tax tips over there as we close out the 2020 year. Bye for now.